I think the best example I could give over the years is Amazon. And I think it's a company, it's our number one performing stock in our entire time at Munro, and it's a company that's taught us a lot. But when we found Amazon we used to earn roughly 7 billion in EBITDA that year in 2014, was what it was estimated to earn in 2015. 7 billion EBITDA. And by 2020, as we look into next year, we think Amazon's going to earn 70 billion in EBITDA. So 7 billion to 70 billion, and its share price has gone up effectively 10 times over that time frame. And so the company has perfectly tracked its earnings over that time frame. When we bought Amazon, we were paying roughly 22, 23 times EBITDA for it. And over time, today, we're still paying 22, 23 times EBITDA for it. But over time, it has re-rated and derated and re-rated and derated. And there's a good chart in our deck if you want to look at it. And so the simple thing we'd want to leave investors with is, Amazon was the winner of e-commerce and cloud computing. So why would you sell your Amazon because you're worried about inflation? Or why would you sell your Amazon because you're worried about something Donald Trump says? All it does is create these re-ratings and de-ratings of the stock price over the journey. But in the end, it's the earnings growth that actually drives it over the long term. And so as we sit here today, the latest episode is we're worried about inflation. Inflation's going to change what the re-rating or the de-rating of Amazon. And yes, it will change the price we pay, but it won't change the fact that Amazon's earnings will continue to grow in the future. And in the long run, we expect their share price to follow their earnings and ultimately deliver the returns that we're looking for. Then one area that I'm surprised has been a bit thrown out in this last rotation is really the cloud computing stocks. It's one of the bigger areas in our fund today. They don't look optically cheap, but on cash flow metrics, they actually are not as expensive as what people think. And I think there's been this assumption, and it's very much coming from the Northern Hemisphere, that COVID's going to go away and we're all going to go back to work. We're all going to go back to work. And so we have these quite amusing conversations with our Northern Hemisphere colleagues where they say, as soon as COVID goes away, we're going to go back to work and we're not going to spend any money on this work from home stuff anymore. And we can say, look, we're calling you from the future here. We're here in Australia, there's no COVID, and no one's gone back to work. Work from home is somewhat here to stay. The digital transformation got accelerated by COVID, and there's no reason to think it will slow down just because COVID goes away. And so from that point of view, when we look at a lot of these cloud computing software names that have sort of been thrown out in this recent rotation, that's ultimately an opportunity to invest in some of the big winners in the next decade, because it's fairly clear that a lot of these software solutions we're using for it, whether it be Zoom or DocuSign or Atlassian products, are going to be with us for a long time, and ultimately that's one of the great opportunities we've seen come up in recent times.